At a time of unheard of market volatility. Joining us today is Enzio Von Pfeil. He is the CEO of EconomicClock.com. It's good to see you again,
Hello.
Enzio. Welcome to the show.
Thank you, Lisa.
Most of the investors I know and people I talk to, they're trapped somewhere between fear and greed. What's your advice? How should they be approaching their portfolios?
Definitely under the auspices of fear and not of greed. We've seen again today that the markets are rising very strongly, but I can only say be really, really careful. If you're a trader who's well plugged in, terrific, go with the flow. But if you're not, I really think one has to stay on the sidelines because it's very, very tricky in this economic time to just protect your wealth.
Enzio, it's Rebecca in London here. As far as the currency markets are concerned, what's the best way for investors to protect their welfare?
Again, if you agree with my view that the economic time is worsening and that thus fear is really the name of the game, then I think that for now, warts and all, the dollar is probably the best place to be just because it's the biggest so-called safest gorilla on the block. Now, of course, there are many qualifications to that, but I just don't think that this is the time that one wants to get too sophisticated by going in and out, for instance, of commodity currencies like the Australian dollar, like the New Zealand dollar.
What about commodities in general, Enzio?
Again, if you accept our view of the economic clock ticking very, very badly, in other words, that the economic time is characterized by an excess demand for money and thus by an excess supply of goods, then it is very difficult to argue, at least logically, why the demand for commodities should rise. The only commodity that I really can wholeheartedly recommend has to be gold because, again, protect your wealth, run under the flag of fear. Gold is, of course, going to be and remain a very safe haven for a long time going forward.
Enzio, if the economic conditions are, as you say, deteriorating, what does that mean for equities? I presume that means you don't buy into the assumption that there's great value out there because stock values have declined so much. Absolutely.
I think that selling time is over. As we pointed out on our website, where the advice has helped our investors earn about 30% since October of 2007, what we've suggested there is that we've gone into L. In other words, that you're going to find the markets flopping around like a fish on a hot cement sidewalk, which goes to say that what we're seeing today, at least in this morning's news, you'll find these very, very strong momentum-driven plays, driven no doubt by props books, by smart props books. But again, for us lay people who are not in the ring, I don't think one wants to be involved in those stock markets. There is simply no earnings except earnings disappointments.
So, Enzio, what about for your average investor, those who are not plugged-in traders, as you mentioned a moment ago, just plain old-fashioned dollar cost averaging, making your monthly contributions every month? If you have a long-term time horizon, couldn't you do quite well in this environment?
As Keynes once said, in the long run, we're all dead. So it just seems to me as if for the next 6 months, you're going to find this seesawing effect where even the dollar cost averaging, which I don't pretend to know a great deal about, but even that isn't really going to help because what you've just made, you lose then tomorrow morning when the markets go down again because of some awful earnings report or another corporate jet having been bought by somebody. So I really think just staying out, keeping your money tucked away in gold at banks that are safe, or things like that. Yeah, probably the government guaranteed banks is probably, it's very unimaginative, not very exciting, but at least you know where your stuff is.
Okay, I think we've had enough.